Well, welcome everyone to today's session. My name is Jennifer Reynolds, and I am the CEO of Toronto Finance International. And my organization, its mission is to promote the Toronto Financial Centre and the Canadian financial services sector globally. And so in that role, I'm fortunate that I get to meet with my peers and colleagues in different financial centers around the world and get a good view into what's happening there and what are the trends in those markets relative to the Canadian context. So we thought for our session here today that would be great to bring that to this particular conference, to bring that global view and to talk about trends in fintech and payments as well globally. So I'm very fortunate today to be joined by some fantastic panelists, and thank you so much to everyone for joining this discussion today. We have Celic, the CEO of TheCityUK. We have Nicolas Mackel, the CEO of Luxembourg for Finance. We have Christopher Chen, the head of investment promotion for Investment Hong Kong. And we have Rajendra Prasard, RP, the global lead from Finacle Payments. So welcome to everyone. Thank you so much for joining the discussion today. So I thought we would start off fairly generally. I think, we want to get a high level perspective of what's going on in your market around the financial services sector, around fintech specifically. So Miles, I'll start with you. Lots going on, obviously, in the UK. Can you give us a bit of a perspective to kick us off here?
Sure, and thanks very much, Jennifer, for that introduction, and thank you for the invitation to take part in this. I think it's been a really exciting conference from what I've seen, and I'm sure this will be an interesting discussion. So from the point of view of the UK, fintech is a hugely exciting area. It's an area where the UK has been very successful in recent years. So for the last 5 years, the UK has grown more quickly than any other major market when it comes to fintech. It's currently seeing inflows and investments that are greater than any two other European countries combined. And it's got a very, very strong case for being in the top 3 fintech markets globally, alongside the US and China. And at the moment, there are about 77,000 or so people employed in the UK in fintech. That is growing at a phenomenal pace. And we're seeing a lot of interest from government, a lot of interest from investors about what more we can do in this space, both in terms of growing that market domestically, but also as a driver of exports. In the UK, I hope I'm allowed to wave my Union Jack at this point. The UK is the world's most successful exporter of financial services, and the growth of fintech is an increasing part of that. And I think there are just sort of 3 things I'd point to immediately as really interesting developments over the last 2 years or so or less. So first is the acceleration of digitalization within the economy generally, but within financial services in particular. And COVID-19, and I'm sure this will come up in the discussion that we're going to have, COVID-19 has been an accelerator of previous trends that have existed. In its own way, so is Brexit. But I think the fact that we're having this discussion, this panel, by video call is something that wouldn't have been unthinkable before COVID, but would have been much less likely. The chances are we'd have all got on a plane and we'd have gone to Canada. We'd have had a fantastic time there. But doing this via video conference is something that's become much more natural. And that, I think, is just a snapshot of the way that COVID has accelerated technological trends that might have taken a decade or more and concertinaed them into a space of 12 to 15 months. And you can see that through fintech. You can see that in the way that digital verification has gone up the agenda, decentralized finance, non-fungible tokens, which do have an existence beyond selling internet memes for vast amounts of money. So all of this has been accelerated. The second one that I point to, certainly in the UK, is the growth of open banking. So the utilization of open APIs for third-party developers that allows them to build applications, allows them to build services around the sort of core offerings of financial institutions. And that just gives customers greater choice, it creates greater competition, and it's something that we've seen real progress in. And there the UK has built on the regulatory inheritance that it's got from the European Union, where it was very active in the development of the Payment Services Directive previously, and that's something the UK is building on, and I'm sure we'll probably talk about Brexit a little more later. And then the final thing that I think is really interesting and has again been accelerated by the last few months is the growth of ESG and the links between sustainability and fintech. And sustainability is now a cross-cutting theme across so much of what happens in finance, so much of what happens in fintech, in much the same way that data is now as important or more important in some ways than capital for a financial institution. So I think we're going to see a lot more of that driven by societal expectations, by customer expectations, but also by employee expectations. People are choosing where they want to work. They want to work at places that make a difference, that they feel have a purpose. And fintechs are really taking advantage of that in the UK.
Yeah, I think that is a really interesting theme that, the pandemic has actually accelerated things like from an innovation perspective, some of the activity there in fintech, but also importantly, the ESG component. I think in the beginning, one wondered what would happen with the focus on that, but it's actually accelerated, which is a good thing that's come out of this, I suppose. So, Nicolas, I wanted to turn to you now to give us a bit of perspective on what's happening in fintech in Luxembourg, but also more broadly in Europe. What are you seeing?
Well, first of all, thank you very much. And I would also like to express my words of gratitude to the organizers for inviting me to speak at this conference. It's always great to be back in Canada, albeit in a virtual format. I really look forward to getting back there physically. I always love to come to Canada and visit Toronto, but also the other parts of Canada. Well, as you say, I think as the only representative of a European Union member state, let me dwell a little bit on what is happening in the EU. I think that is also not only what is most of interest to your audience, but also directly impacting what is happening in Luxembourg, because that is basically setting the framework for what in many member states is happening. And then there are maybe one or the other elements about Luxembourg I can chip in. I think the first point I would like to make before getting into different trends is to underline really the strength of the political commitment to this area, digital finance. The European Union, and in particular the Commission, which is the supranational quasi-executive of the European Union, has already a couple of years ago drawn up a fintech action plan, and more recently in September last year has presented a digital finance package, which was a very large and really a strategic package, as the name says, of initiatives relating to digital finance. They're basically built around four different pillars. The first one is how to deepen the European single market for digital finance. The second is to adapt the EU regulatory framework, and I will come back to that at a later stage. The EU single market has already been really very strongly integrated. Miles has talked about it, and the UK has made a great contribution to it. We all regret that you're not part of it anymore. But we need to constantly keep the regulatory framework updated, because we see that there are new activities to which the current framework does not cater. And then there's the issue, as Miles has also referred to, of data. Data management is becoming really a major issue and nearly a science on its own. Finally, and that is not something that will surprise anybody at a payment conference, the issue of security, resilience, the operational questions that relate to digital finance. That is, I think, the first point. The second point is what is really happening on an operational point of view. I think what we are seeing in Europe is very clearly, it may also have been accelerated by the pandemic. It's the payment sector that is really topic number one. You see it whether it is with neo-banking, PSD2, which is the European acronym for the harmonization leading towards open banking. The second trend is really maybe an interest for everything around tokenization, to see how we can create more securitizable assets, so that there are more assets people can invest in. Data, I already mentioned, as well as resilience. So in Luxembourg, more specifically, Miles mentioned that the UK is the largest exporter of financial services. Something they have exported over the last 5 years also is not only services and products, but also entities. And thanks to that, they have, for instance, sent over the channel to Luxembourg quite a number of payment institutions, next to, of course, others like asset managers. But in the payment sphere, we really see that where many of them were really operating out of London, they had to switch to other European venues. And we saw large ones like Airbnb, Alipay, and so on, settle down in Luxembourg, where already the big ones like PayPal and Amazon Pay are operating from. Then in Luxembourg, what is another trend is everything around RegTech and Fintech. These are obviously very important given the role that compliance, KYC, risk management are playing, especially since the last financial crisis. Luxembourg, as a major fund hub, is attracting many of the players developing new solutions in that area, because companies simply need to have digital solutions for a more efficient and cheaper way of operating.
Yeah, it's interesting that RegTech certainly is a really hot space right now, and who knew that regulation could be a interesting and hot space, but it certainly is today. So I'm going to turn it over to Christopher next. We'd love to hear your perspectives on what's happening in Hong Kong and FinTech and the broader Asian perspective as well.
Sure. Thanks, Jennifer. I'd like to say thank you to TFI for inviting me to speak today first. It's an honor to appear on a panel of luminaries specifically centering upon FinTech financial services and how it's evolving in this day and age. A little bit about Hong Kong, a little bit of Hong Kong and China, actually. Hong Kong, as most of you probably know, is actually reinventing itself. It's in an evolutionary phase of making FinTech one of the core strategic pillars of its economy. Hong Kong, as you know, comes from a history, a legacy of financial services stretching back to the 1960s, 1970s. And it's sort of a no-brainer for Hong Kong to adopt FinTech as one of the core drivers of the economy, especially a core driver of the financial services industries, with the other strategic pillars being real estate investment trusts and family offices. For those companies wishing to go into China, Hong Kong makes the obvious case due to its common law being able to provide protection for financial assets as well as intellectual property. At the same time, maintains a liberal regulatory environment that is contrary. Contrary is the wrong word. That is different from that you'd find in China. But one of the core aspects I want to talk about is the concept of maturity. Although Hong Kong may come across as a mature financial services market, in terms of FinTech, it is not mature. It is still developing. There's still ample opportunities available for entities, for companies going into Asia. Case in point, and I believe Nicolas mentioned that for Europe, RegTech is a big thing. Well, in Asia, RegTech is almost everything. There is a distinct lack of a regulatory environment. There's a distinct lack of regulatory technology in order to facilitate that environment. FinTech or wealth tech, more or less the same thing, is also underdeveloped in Asia. There's a huge amount of high net worth individuals, huge amount of family offices proliferating in East Asia, North Asia, South Asia, Southeast Asia, and yet it's still pretty much a paper industry. And so there's huge amounts of opportunity. Insure Tech is another. Insure Tech actually naturally leads to a blockchain. It is completely underdeveloped. I'm a former Insure Tech individual myself. I can tell you with a fact that it's actually a sorely underdeveloped industry, dependent upon traditional processes. Now, having said that, with all that under development or industries currently under modernization, there are some industries that have, I wouldn't call it they've reached maturity, but there have been calls by local governments within Hong Kong, within mainland China, to put the reins on. And interesting enough, ironically, one of them happens to be the payments industry. There is now, I hope to be able to share more about this, there's actually a call for more regulatory controls over the payments industry. Now, I think if you look at China, China has been a pioneer in payments with Alipay in the huge e-commerce industry, and that over the last 5 years, there have been a number of companies that have, or a number of industries, subsectors, niche industries that have gone kind of crazy. And so there had been a call for greater consumer protection, greater business protection, and therefore regulations have been put in place. On the blockchain industry, for example, China is regulated in that regard. Hong Kong is not. However, there are going to be upcoming controls when it comes to, say, crypto trading or blockchain development. And of course, it depends on the type of industry that enters Hong Kong and the type of activities that they do. But some industries will find themselves requiring a license if they choose to go into that territory, and that's solely for the protection of the customer as well as the B2B market.
Thanks, Christopher. RP, I'm going to turn it over to you next to give us the perspective from India. Obviously, lots happening there, and we'd love to hear about it.
Absolutely, Jennifer. Firstly, it's great to be here, and thanks for having me in the conference. And I think I just have to continue from where others left. But before that, the case for India is slightly different. The context of India is slightly different. The scale, for one, is much bigger than some of the other markets. The diversity in the market is again very complex. There is the economic levels of people again is quite the spectrum is quite huge, and so on. The last 3 decades have been very significant for India, because these 3 decades also, beginning of the 3 decades back was when India opened up its economy, and it was also the time when India started getting into IT services. And as we all know, in the last 3 decades, India has produced probably 3-4 very large, even by global standards, IT services companies, and some global product firms, one of which is Finacle. So this growth of the industry and economy of India has really led to growing financial literacy, growing IT literacy, very growth of disposable income, etc., which has really contributed to making this a very potentially large market for fintechs and IT in general. The other estimate is that in another decade or so, India would have about another 140 million middle-income households and about 20 million high-income households. It is largest within Asia. It is largest fintech funding market, and what we have seen is there is a very high adoption rate of almost about 80% for fintechs. Last year, of course, there has been a little slowdown on the investment front, but otherwise, anywhere between 3.5 billion is what we see in a year for fintechs in this market. And it is not of any surprise that this is evidenced by the RTP volume, the real-time payments volume in India, which is amongst the largest in the world, about 25 billion transactions last year. And the 2 or 3 different industries that are really active. Last 7 or 8 years, we have had 3 different banks, 3 different types of banks coming into within India as regulator allowed it, the small finance bank, and 2 others which are totally driven on back of digital, the payment bank and the prepaid instruments or the neobanks. And these banks, digital-only banks, have all sorts of, they do lending, they do vendor payment, current account, cards, payroll processing, the whole, spectrum of banking. And you may already be aware that there are players like Google Pay, Paytm, who are into digital payments, UPI kind of payments. The unique thing about this is these are API-based payments, and multiple accounts can be stored on these payment apps. Lending is another area which is getting disrupted. We will probably come to those details later on. But effectively, what is happening is through the last few years is financial inclusion has been ever increasing. As you would know, India has been a place where it was a little underbanked maybe a decade back. So that has improved a lot. On fintech, specifically from small unicorns, many of them have come to mainstream. They have become, have very differentiated and very focused value propositions. Their volumes and value have significantly increased. I'm given to understand that next month or two, we will have the largest IPO for a fintech, which was a unicorn a few years back, started as a wallet, now is a bank and an e-commerce company. The IPO is about close to $3 billion US. And fintechs and third-party lifestyle apps are fast replacing banks' own, digital online mobile channels as prominent means of, availing banking services by end customers. So end customers are moving from traditional channels to, fintech or third-party lifestyle applications. So to summarize, really the business models are changing. Innovation, agility, and client experiences are driving fintech and technology in general in India.
Really incredible pace of innovation there, definitely. So we certainly can't talk about financial services or fintech without talking about regulation and government policy. So I thought we would start with Miles on that one, because I know in the UK there was an independent review of the fintech sector, the Khalifa review, and so it would be interesting to hear some of the findings and recommendations that came out of that.
Sure, thanks very much for that. So the Khalifa review we thought was a really good indication from the UK government about the importance that it puts on the fintech sector. And it was run by a very well-respected industry figure called Ron Khalifa, with support from Innovate Finance, which is a business group dedicated to fintech, and with input from organisations such as TheCityUK and across the industry. And so the aim was really to identify how we can find the key potential growth areas and outline how the UK can best support those, and to build on what had gone before. So there was obviously a sense with the sandbox, the FCA had put in place, that was world leading at the time. But of course, one of the problems with first mover advantage is that you get the benefits of first mover advantage, but everybody else gets to learn from your mistakes. So how do you keep that momentum going? And so the review proposed a number of things that the UK should build on and introduce. And one of them was, which I think is particularly exciting and also reflects a particular challenge in the UK, was this idea of a scale box. So you've got the sandbox where you can sort of test these ideas and test your proposition with a regulator, but a scale box that in essence would sort of build on that and look at how you scale up some of these companies, how you ensure that they've got the right mentoring in place, the right finance in place, the right support in place. And that's something that we think is going to be hugely advantageous as the UK industry moves forward. And it does address, hopefully will address, one of the challenges that lots of tech firms, and not just fintech firms, find, especially outside the United States, which is how you get that scale up. And I think the UK is well positioned to improve what it's doing there. In fact, the last time I was in Canada, I was in Toronto, and I was talking to a major scale-up accelerator in Toronto that had been looking at how they could expand internationally. and they'd identified London as the obvious next place to go. So a lot of the ingredients are there, but I think the review has rightly identified that we need to ensure that they're mixed and taken forward properly. Also, among the other recommendations, the creation of a digital economy task force to ensure alignment across government. I mean, obviously, and again, this is not something that's unique to the UK, but if you look at fintech and tech more generally, often it falls across a number of different governmental departments or a number of different regulators. Data is something that is not just within financial services, as we've already talked about. So I think that's very welcome. Also, in terms of hardwiring fintech into being an integral part of the UK trade policy, which the UK has now developed on an independent basis as it's left the European Union. And I think that's really interesting. And again, when you look at the way, and we can talk about this later, no doubt, but if you look at the way that data and tech has been hardwired into the UK free trade agreement with Japan, and the exciting news that the UK has applied for membership of the CPTPP, which again has a number of countries in there who are, really at the cutting edge in terms of data. And then looking at other areas such as driving international collaboration through setting up a new Centre for Finance, Innovation and Technology, developing a central bank digital currency. So I think these are all really exciting. And what's been interesting is that in the conversations we have with international counterparts, whether they are in industry or in government or in regulators, already a lot of the work that Ron Khalifa has done has been picked up as best in class. And people are very keen to explore what they can learn from the review that's happened in the UK.
Yeah, I mean, I certainly think those themes are relevant in Canada and other markets. Things like, that scale up issue is huge for Canadian fintechs and companies generally, and the regulatory environment reporting to numerous regulators is a recurring theme, unfortunately, here too. So, Nicolas, I'll turn it over to you. We'd love to get the perspective from a policy regulatory perspective in Luxembourg, in the EU. What are you seeing right now?
Well, I think if you allow me, I will just very briefly make a little reminder about the EU. As many of you will know, and all of you, actually, the EU is made up of 27 different countries, each with normally their regulatory framework, unless the EU itself has adopted a regulation to harmonize one specific sector. The advantage of the EU actually legislating is that until such time that, especially in the financial services area, that there is an EU regulation, you can only operate country by country. Once there is an EU regulation, you can emit, for instance, in one country, a passport that allows a firm to operate throughout the other 26 countries. And that then gives this firm access from one vantage point to a market of 450 million reasonably affluent consumers. That is the big advantage of the European Union. And that is why, for instance, in the traditional financial services fields like banking, insurance, and many others, capital markets, although not enough in that area, the level of harmonization has already been pushed quite far, but it is more in the new areas of financial services that we have seen a need for new modernized legislation, because these new activities don't fit into whatever has been defined previously for the traditional services. And that is part of what I mentioned before, the digital finance package. There have, for instance, been 4 different pieces of legislation or activities that I would like to highlight. The first is a crowdfunding platform regulation, which creates a regulatory framework at a European level for this activity. Before, until October last year, there were only national regimes, meaning that if you are launching a crowdfunding platform in France, you cannot raise money in Germany and the other way around. Now, with a European regime, you can set up anywhere you like in the European Union and raise money all over the other countries. The same was done in October with what is nicely called MiCA. That is not a dog or a lady. That is the Markets in Crypto Assets Regulation for tokenization activities. And that also is something that is certainly of importance in the coming months. We see definitely a very strong interest in that. Something that is also very important, and with another nice acronym, is DORA. It's not Dora the Explorer or any figure of that kind. I see Jennifer knows what I'm talking about. But it's the Digital Operational Resilience Act. I think we are learning from the American songbook when it comes to inventing acronyms there. It's all about ICT risk management requirements and so on, cybersecurity, everything that really is very high on everybody's agenda, or definitely should be. And then I mentioned previously the payment sector. In that area also, the Commission is coming forward with a real strategy to take it to the next level. Regarding Luxembourg, allow me to just briefly mention a law that has confirmed earlier this year that the use of distributed ledger technology is recognized for the issuance of dematerialized securities. So really taking also there the regulatory framework into the 21st century.
Yeah, I think we could have a whole panel discussion on crypto and that space, certainly. We'll touch on that though again, hopefully if we have some time. But I wanted to give Christopher the mic to talk a bit about, we obviously we know in Hong Kong the regulatory regime is seen to be conducive to growth and nimble. So wanted you to talk a bit about what are some of the regulatory issues that you're seeing right now or opportunities.
Thanks, Jennifer. Yes, that's absolutely true. I mean, Hong Kong does have a liberal regulatory environment for fintechs, and the idea behind that is that the more liberal the environment, the more conducive it is for companies to grow. This is especially when you compare it, and I like to cite the crypto market. For example, there is a massive firewall that separates China from Hong Kong. Companies that set up in China tend to have to get will have to get a license in order to work in the crypto blockchain space. But in Hong Kong, that's not necessarily the case, depending upon the nature of the business. There have been, in terms of the regulators themselves do have a number of initiatives that actually intend to spur the growth of particular industries. For example, there's a proof of concept idea where the government will actually pair a major multinational with an up-and-coming post-startup, a company that's qualifies as an SME but fully in expansion mode, to get them to enter onto the full Asian stage. In other words, set up in Hong Kong, but with the idea of expansion into North Asia, East Asia, Southeast Asia. Another one is the Fast Track program. Actually, there are several Fast Track programs being run by different agencies of the Hong Kong government, and this is basically for companies to get their fintech footing within Asia without actually even being there necessarily. And this is actually a reaction to the lack of business travel put upon us by the global pandemic. Now, having said that, I think I mentioned before, there are some regulatory moves to try to rein in some control over some core industries. And the first one is actually for money service operators, for MSOs. To get a license in the payments industry as a money service operator, particularly for those doing Forex, is getting harder. It is getting harder. And this is to stem the abuse that's been happening in that industry. So to get a license in that sector is harder. To get a bank account in that sector is also quite hard due to the lack of interest or the amount of suspicion that commercial bankers will have in opening up an account in that particular sector. In terms of crypto trading, it's not official yet, and it's still underway. There is a push towards greater legislation towards crypto trading. There's an emphasis towards more B2B as opposed to B2C. In other words, reining in the day trading aspect of crypto trading, reining in a small B2C shops that are operating relatively unregulated in the industry. The push is for distributed ledgers for trade financing. In other words, a specific B2B aspect for the crypto and blockchain industries. So there have been some initiatives towards greater control over the industry. But again, as stated before, this is purely for the protection of the consumer in the B2C space.
Thanks, Christopher. I'm going to turn to you, RP, but before I do, just wanted to remind the audience that we are happy to take questions from the audience as well. So please do put those out there, and I'll make some time for that too. But RP, I'll turn to you. We'd love to get you to talk a bit further about what are the key factors driving growth in the Indian fintech market right now?
Sure, Jennifer. Definitely the one thing that I spoke of, the larger industry, IT industry over the last 3 decades, that has contributed to the leadership of, creating a very fine stack. Obviously, with the government and regulations, only it's possible to create, I'll come to why we really define this as a defining moment, rather, for the fintechs and technology enabled governance, if you will. So at the outset, what India has built is a clean, coherent, clutter-free digital financial infrastructure for open banking, and we do have some acronyms, so let me start with that. So there is, as part of this, what we call as the India Open Stack for banking and commerce. The foundation of that is what's called the JAM Trinity. JAM stands for J stands for Jandan, which is the banking accounts. Over the last few years, there has been an explosion of banking accounts in the country. Then A stands for Aadhaar. Aadhaar is the unique identity that almost every Indian has today, which is a digital identity. 1.2 billion people have a biometric-based digital identity, and we have about over 1 billion mobile connections. So that's one of the foundation stones for this clutter-free digital financial infrastructure. Then you have the API stack. The API stack enables, for instance, there is this universal payment interface, unified payment interface, which is the real-time payment of the country, which is what I spoke of about clocking over 25 billion transactions annually. Then you have, for bill payment and presentment, there is another API stack called Bharat Bill. For tax, goods and services tax, there is an API. For collection of tolls over the highway, there is an API. And then we have also defined what are those data sharing or the consent layer for data sharing. So there again, we have defined about 18 classes of financial information defined across banking, insurance, and investments, with users' consent is opening up for new players in the account aggregator space, NBFCs, etc., for information sharing under consent from financial information providers to financial information users. Then you have a cashless layer, which is electronic payments, which is given by UPI, IMPS, etc. And you have a paperless layer. The entire thing is about digitalizing the whole experience of banking and economic activity. And then you have a presenceless layer where you have digital authentication through Aadhaar. To give you an example of APIs, from Finacle, we have an API Connect. Thanks to about 2/3 of the Indian banks using Finacle, we have bringing out an API store called Finacle API Connect, which has got a repository of business APIs, ability to create and publish APIs, and so on. And there is a sandbox for fintechs and trusted third parties to test their innovation value proposition built, on Finacle APIs. So essentially, government has contributed the leadership of the IT industry, which has seen success globally have contributed to this. Regulations and things like bringing about digital identity and bank accounts at a huge scale has contributed to this success. A large consumer base having a mobile and smartphone access has contributed to it. High technical competence has contributed to it, and high penetration of bank. I spoke of the banking accounts. So these have essentially contributed to make a very unique case for India. And obviously, this is a very short time to really unravel what are the details of it. But I can tell you for sure, it is a case study for the world.
Thanks, Arpi. That's really interesting. Maybe it leads me to my next question. If you had to pick one area in India that, in fintech that, you're most excited about the opportunity that you see as a major opportunity for the future, what would that be?
Jennifer, are you asking me?
Yeah.
All right. Okay. Much like, the way the payment scene has been disrupted, and I spoke of it a little more in detail. But the other thing that is most exciting now is the same kind of disruption on the lending, especially lending for retail and MSME, the micro, small and medium enterprises. It's estimated, or the study says, that there are at least 50 million credit-starved MSMEs in the country. And traditionally, they have not been part of this, the established lending forums like banks and NBFCs. They have been taking money from, money lenders, and these are small ticket lending. So this is getting disrupted, and in the short to medium term, or rather in the medium term, what we are going to see is this moving of economy from a prepaid economy to a postpaid economy. And towards this, the industry and the participants have come up with something called an Open Credit Enablement Network, OCEN, which is effectively a framework of APIs for all these participants. And what we are also seeing is unbundling and segregation of roles, much like what has happened in the other side of payments, etc. So between lenders, lending service providers, they have made loan application much more simplified, standardized, and digitized. And so when you have a digital distribution of credit, the whole scale will be very, very different. And it will also going to obviously help in reducing the cost. I want to give you some examples. What is enabling, or what is using this OCEN framework to implement lending in the field. So there is a corporate non-profit collective called Sahamati, which is a collective of lenders and account aggregators to help fintechs adopt these public APIs. Similarly, there is something called a Credol, which is a non-profit collective enabling cash flow-based lending as per the OCEN protocol or API. And then there is an app by the name of Sahai, which is an implementation of OCEN for invoice discounting use cases. So I believe, you asked me for one specific area. So I believe, lending or embedded finance is something that you will see significantly disrupted and very, very much digitalized from India.
That's really interesting. Maybe Nicolas, I'll go to you. What's that one area that you're excited about, whether it's the Luxembourg context or EU context?
I think EU context, and probably on a global context, if I had to pinpoint to one area that has the potential of really disrupting, it's central bank digital currencies. I think many people haven't quite yet understood the real disruptive power behind that. And then I would say, if I may, a second, that would be tokenization in the investment area.
I think everyone is, that topic is, where is that going to go? That's very interesting. How quickly does it move? If we all had a crystal ball, I'm sure we'd be very wealthy on that front. But Crispin, I'll turn it over to you. What's that one area or two that you're excited about from the Asian or from the Hong Kong perspective?
I think Nicolas just stole that from me, as tokenization of the wealth industry. I mean, if you look at Asia, the sheer amount, basically the modernization of the banking, insurance, and asset management industries is a long time coming. But when you look at the amount of capitalization that's sitting in Asia, particularly in the asset management industry, tokenization of that industry would basically be relatively far-reaching, but it goes hand in hand with modernization, with the implementation of new technologies such as basically fraud detection and other regulatory aspects that are, frankly speaking, required in that region.
Miles, your perspectives?
I've sat here as everyone's gone round trying to think what is the single most exciting thing, because there are so many, and colleagues have already touched on a few of those. I think crypto, absolutely. I think RegTech is going to be huge. Data analytics, which is an area where the UK has, I think, capability, probably the one. If I had to sort of focus, that would be the one that would be most exciting from my perspective. And I think that we are, in many ways, despite the fact this has become, it's a cliche now that this is the new oil, but we are still in the foothills here. There is so much more that can be done with data. And if I just think about the amount of data flows in financial services between, say, India and the UK, we can't actually measure that properly. I mean, this is astounding. You can measure, when it comes to trade, you can measure the number of widgets, the number of cars, the number of iPhones that move, in ships and in planes across the global trading system. And yet data, which makes all of this possible, is not measured according to WTO standards or many national standards in anything like the same kind of way. And for me, that gives an indication of quite how far we've yet got to go in this space, just as an example. I'm going to cheat and pick a second, which is a more generic piece, but I think it's absolutely fascinating the extent to which fintechs have been on a journey. 10 years ago, I remember somebody saying to me in Silicon Valley, 10 years ago, every fintech's business plan was, I am going to set up, I'm going to be successful, and I'm going to eat UBS. And then it was 5 years later, I'm going to set up, I'm going to be successful, and I'm going to be acquired by UBS. I'm just picking UBS as a generic example here, by the way. And now it's, I'm going to set up, I'm going to be successful, and I'm going to partner with UBS. And I think that partnership approach is going to be very different potentially. And I think opens a whole range of, a whole suite of potential options. And I think that, if you like, as a generic approach is also quite interesting and quite exciting.
Yeah, I think that is really interesting how that conversation has changed over time. And now that's where we're at. It's really interesting. One of the questions that came in from the audience, I don't know if Miles, you want to start with this or someone else, but I think is a good one. And it's around digital identity and how that's impacting areas like open banking and payments modernization. Miles, did you want to comment on that?
Yeah, thank you, and I'm sure colleagues will have a view on that. So I think this is enormous, and I think it's also an enabler for other things. And when you look at the whole idea of vaccine passports, and I'm not going to get into whether or not vaccine passports will happen or should happen. That's a debate that we could be here all day with. But it's that sense of what is enabled and test cases of technology, and there are just going to be more and more examples of this as we adapt, as fintech develops, as customer demands develop, develop, and so on. That sort of sense of digital identity. There are some countries that have done it extremely well. Some of the Baltics have done it extremely well already. And what we can learn from that, and how we can use that as an enabler for services, not just in the private sector, but the public sector as well.
Would anyone else like to jump in on this topic?
So the biometric identity that I spoke of, the Aadhaar, which was implemented effectively, pretty much 95% of the Indians have multiple use cases. So there is something called a direct benefit transfer to whether it's farmers or people in general. So Aadhaar has been used as as an identification mechanism for transferring of direct benefit from government to citizens. Similarly, Aadhaar, there is an Aadhaar enabled payment bridge which is used instead of using your accounts, banking accounts. Those are used as via media to transfer funds, to make payments, etc. And Aadhaar is today also used in the pandemic here, in the case of vaccination, as an identifier for providing vaccination. So I would say Aadhaar has been extensively used, a very, very successful digital identity program.
Yeah, it's a really interesting area to see where we'll go there. So I'm cognizant of time. We could have this discussion for a lot longer than an hour. Lots of interesting things to talk about. But I did want to leave time at the end to give each of you the opportunity to give a little advice to fintechs who are thinking about expanding into your particular market. What advice would you give them? So maybe Christopher, I'll start with you on that one.
I think the best advice is take heed of the concept of maturity. Basically, is your technology applicable to the market that you wish to expand in? For example, are you heading into a big wall of regulation, or are you heading into endless opportunities and fundraising avenues awaiting you? If you take a good look at your own line of business and see which geographies you're most applicable to, that basically is the best starting point.
Your advice to fintechs looking to come into the Indian market?
Yes, Jennifer. My advice would be, have a good understanding of the market, have a good understanding of what is the problem that you are resolving, and have a quick idea of what you foresee as in the immediate future. What will be your goal for a positive cash flow? Because there is only so much cash you can burn for a period in time.
Good advice, Nicolas. Your advice from the perspective of the Luxembourg market or EU market?
Yeah, I think that many people in Canada will probably look at the EU as a very complex animal. The Canadian Federation is made up of 10 provinces. We are made up of 27 different countries. But yet, I think that the EU is in many regards a more integrated market than, for instance, even the United States, and probably even more integrated than many aspects of the Canadian market. So don't be afraid of that complexity. And anyway, I think if you want to operate in the EU, probably Luxembourg's unique multi-jurisdictional expertise is certainly there to help you cut through that complexity. That is our added value.
Thanks, Nicolas. Miles?
I'm afraid I can cheat slightly here, because there is on our website a report called Launching a Fintech in the UK, which we produced in 2018 with the law firm Allen & Overy, and that is all the sort of background information that you need on setting up. I'd also recommend that alongside that report, that anybody interested in coming to the UK would talk to Innovate Finance, which is our dedicated organisation that works with fintech. And it's easy, it's straightforward, it's competitive here. But one of the big advantages, and for me probably the single biggest advantage of being based in the UK, is that entire, not just that entire financial and related professional services ecosystem that exists here. So not just the financial services sector, but the audit firms, the law firms, the superb regulation and supervision that we have here. But please don't tell the regulators and supervisors I said that. But it is also the creative industry that we have here, the tech industry, the universities, and the pool of talent. So, I would absolutely recommend anybody who's interested that the UK would be a terrific location for them to come and set up their fintech.
Thanks, Miles. Well, thank you to everyone on the panel. It's been a really interesting discussion. As I said earlier, I think we could have gone for longer than an hour, certainly. Great perspectives for the audience here in Canada. We really appreciate those global perspectives. I think, at the end of the day, financial markets are global. And so I think it behooves all of us to collaborate together, to share best practices and information. So thank you so much for your perspectives that you've shared today. I really do hope that we can convene this group again, perhaps in person at a conference where we can actually network and speak to some of the people at the conference. But we hope to do that someday soon. So thank you to our panelists so much for joining today. Thank you to the audience for listening in, and I hope everyone enjoys the rest of the conference. Thank you.
Thank you.
Thank you.
Thank you.
Thank you.